Delighted to be back and delighted to spend some time with Don Cornwell over at PJT. And Don, really nice to see you. We're going to talk a lot about sports. And what I find so fascinating about this, as I was thinking about it, and you and I were talking a little bit, is investing in sports 5, 10 years ago, maybe even 2 or 3 years ago, would have been a relatively limited conversation. We would have been talking about basically like rich guys buying and selling sports teams. It feels like the whole world has turned upside down. Democratization like we've never seen. What happened? Like, why are we here?
It's pretty awesome. First of all, good to see you, and thanks for having me. It's pretty amazing, isn't it? So we've had, I think the big story has been institutional capital coming into the space, and we'll get back to that in a moment. I think the first thing that happened was years ago, and this partially was driven by the likes of DraftKings and FanDuel, that you had young engineers coming out of MIT and Caltech and Stanford and Harvard deciding they wanted to go into sports. And they also, at that point in time, because people saw, the rocket ship that DraftKings and FanDuel seemed to be becoming, you had venture capital backing them. And so all of a sudden, the venture community for a long period of time effectively ignored sports. And so now, even though there's been a technology revolution for the last 20-something years, sports really hadn't participated. And now, over the last 5 or 6 years, you're seeing the fruits of those VC investments, where you have all these innovative, disruptive companies who are now coming to the forefront, who are helping to monetize the interest that we all have in sports. And so when you all of a sudden have that dynamic, you have the financial profile of these assets changing, right? Because it used to be, as you said, a wealthy guy who, if at best maybe broke even with the team, but loved owning the team, and that was okay, right? And they went up in value because there's scarcity value and there's some tax reasons, blah, blah, blah. Now all of a sudden, you've got all those aspects, but you also have this disruptive, innovative technology that is changing the way these P&Ls look, and that's got the institutional investors saying, this is interesting. This is a world we couldn't play in before. We've always wanted to play in it because we love sports, but now I can actually point to some real growth that's based on secular changes that are happening the way we all interact with the thing we all love in sports.
Right, and one of those secular changes has to do with regulation and sort of a new look at especially sports betting, which used to be kind of a dodgy, shadowy, call your bookie sort of situation. Now it's technology enabled, it's getting legalized more and more. And so help me understand that piece of the market, because that creates an ecosystem in and of itself in many ways.
Absolutely. So look, as you alluded to, sports betting's always been here, right? And obviously it's been around the rest of the world, and it's been here in an illegal way in the United States. With it becoming regulated, you're getting what I would consider to be much more concerted efforts to market to customers. You're getting technology that people can trust, and you're getting, most importantly, the leagues and the teams to buy in, right? So for years and years, the NFL, the NBA, baseball, they fought against sports betting, right? They had tons of lawyers really keeping PASPA in place, and the minute it flipped, all of a sudden you've got these leagues going all in, because they all see what we see, that there is this 24/7 interaction with sports that people want to have, right? And it's through social, it's through, group text and the like. One way to monetize that interest is to get people to bet on sports and to talk about it. And, it used to be that if I was a Mets fan and they were playing on a Tuesday night versus the Astros, I could skip it, right? It's one of 162 games, not a big deal. But now, if I can real-time bet while I'm watching the game, so I get to kind of kill two birds with one stone. I get to follow the team that I grew up loving, but I also get to scratch that itch of getting a little bit of action. It's a win-win, and so the leagues have bought in. But importantly, what it's also done, going back to the original point, is it's increased the value of the data, right? So we saw this renaissance in sports where the media rights, and we all know the story, the media rights have gone up and up and up, and that's helped bring valuations up. My view of the world, and I think a lot of people share this view, is that we're in the first inning, to stick with the baseball analogy, of the data revolution, where you're seeing NFL, the NBA sell their data packages to the likes of Genius and Sportradar and others, and that's going to continue to go up. All right, and you need that data for sports betting and other things, right? There's fantasy and there's NFT related items. Those data packages will get more and more value, and so we may just see a rinse and repeat of what we saw with media rights. And I think that's another thing that's got people very excited, because you may, even though we all know the regional sports network model is messy and there's a lot going on there, if you have this other thing coming up the back of sports data that could frankly even be bigger than media, gets people quite excited.
All right, I want to come back to media in a second, but you mentioned two things that we can't move past before talking about them a little bit. Fantasy and NFTs. Let's start with fantasy, because that is, I think you and I both know anecdotally, and you know the data better than I do, that level of engagement that you have with the sport, and not just with your team, but with teams across the league, especially when you think about fantasy football, from my 17-year-old to my peers, they're engaged in this game, as you say, 24/7, picking a team, watching the scores, watching individual players. But how does that become investable in your mind?
So it's all connected, right? Because what the fantasy companies are able to do, right? Put daily fantasy to the side, right? Because I think what you're talking about is season-long fantasy, where you're in a league with your college buddies, and it's a great way to connect once football or baseball season starts. Those companies actually collect a lot of data about you, so they know, because that tends to be where you get your sports information. So they know the teams that you like, and you are somebody who engages, with their app on a fairly regular basis. And they are now figuring out they can sell you other stuff. I think you've seen with DraftKings, right? They actually launched their own NFT product. But this is why the daily fantasy guys, and to a certain extent, when you think about Yahoo Sports and CBS Sportsline was an interesting partner, and clearly ESPN is viewed to be the crown jewel. The betting companies want to partner with these fantasy companies because they have this data, right? And so it's a great place to look for potential bettors. But what I think we're seeing is, as we think about the entire P&L of the sports team, so not just the line that relates to data, but merchandising, collectibles, people are looking to season-long fantasy as a place where I can find out information about the customers, right? Because that's one of the things that people haven't realized. Over the years, the teams themselves don't have great data on who their fans are, right? Because most of the fans, they just watch on TV, they've got a cable package, and there's no real interaction between the team itself. It goes through multiple layers between the team and the consumer. Now with fantasy and these other things, they're getting direct data about their customer, and that allows them to market other products, NFTs being one. Collectibles, you've seen some of the announcements about some of the deals that are happening in that space, and that is creating massive opportunity for the teams. And it's not just, oh, this is nice, we're going to sell more people baseball cards the way Topps sold baseball cards. There's two other aspects to it. And this is really true for all collectibles. It used to be that, little Don Cornwell, when I collected baseball cards, I'd run around to these trade shows in the city, and I'd go and I'd try and find my rookie Dwight Gooden or Darryl Strawberry baseball card, and I'd pay some amount of money. Well, guess who never got any of that, right? Team, the league, the players. They got the original sale, right? Whenever somebody bought it in the pack with the nasty gum, but they never got the secondary market. Well, with these marketplaces that are being set up, the leagues are part of them, right? They have equity, they've got deals with the likes of Fanatics, and so they'll participate in that, right? So if you think back to the way it worked in the 70s and 80s, where there's all this activity happening in the secondary market, and the teams and leagues never got a piece of that. Well, guess what? Going forward, they're going to. Second thing I'd say, and this relates more to blockchain. You talked about NFTs. I could be somebody, and I am. I've got this massive card collection, and I have a lot of Mets, right? So the Mets don't know that, right? And they have no way of talking to me. They don't know that back in the 80s I collected a lot of Mets baseball cards. Well, imagine if they were all on blockchain and they could actually speak to the holder of that, right? And that's what the future is, right? Is that all of a sudden the teams and the leagues, if they can get their products on blockchain, that's why NFTs are so important, they can actually communicate with them and communicate with them directly and get data, and then figure out a way to get them onto their system. So it creates an enormous amount of upside. We're just now scratching the surface of it. And going back to my original point about the venture community, you're seeing so much capital and so much human capital try to figure out this problem because they know the win is a big win, right? There's a lot of money to be made if you can get this done.
Well, and as you allude to, your card collection, and you name checked a couple well-known stars, and I'm sure you've watched just a plug for a great documentary out there,
it's amazing.
Once Upon a Time in Queens, 30 for 30, the '86 Mets. I think about that team in a lot of ways, and looking at those personalities, whether it's Dykstra or Hernandez or Gooden, you think about who those players were and their businesses, which were really limited to their playing careers, versus athletes today who do have, like the leagues and the teams, a literal stake in what they're doing. How has that changed the investment landscape in your estimation?
Yeah, no, it's a great point. Name, image, likeness is a huge part of this, right? Because whether it's video games, whether it's NFTs, while I'm a Pittsburgh Steelers fan, I love the Pittsburgh Steelers logo. I also, love the idea of getting things that have Franco Harris on them or that have Jerome Bettis on them, right? And that's a name, image, likeness thing, and that goes through the unions. And what we've seen, and this has been the case for a while, right? The unions have always had deals with the video game companies, right? If you want to play John Madden football, you've got to go cut a deal with the NFLPA because you want to get the faces and the names. What the unions have done is they've set up these corporate entities for NFL and for Major League Baseball. They have something called One Team. For basketball, they have something called Think 450. And they've brought in professional management people who actually know how to cut these deals, who understand these ecosystems. They understand NFTs, they understand video games, and they're the ones who are actually going and cutting the deals, and they're getting these great contracts. And so all of a sudden, you've got these revenue streams coming in. You've got a business that doesn't have much cost, right? You've got to give royalties back to the unions themselves. And outside investors are looking at that and saying, wait a minute, this is a backdoor way of me playing the same secular themes that I love about sports without having to deal with actually owning a team, right? I can go and so both One Team and Think 450, my suspicion is that they're getting lots of phone calls from institutional capital saying, how can we be in business with you, right? Any way we can be in business with you, we'd like to be in business with you. And that is something that I think will continue, and I think we talked about the other day with college. We're not there yet with college. It's going to come at some point. It's going to take a lot longer. It's a much more complicated discussion because of the way that ecosystem is structured. But there's no doubt in my mind that's something that's coming down the pike as well.
Yeah. Go back to the media situation for me, if you will, because as you say, like that was the bread and butter. That was so much of what the intrinsic value, you know this much better than I do, of buying a team was the media rights associated with it, whether it was through a regional sports network or whether it was as part of a broader national deal. With different engagement, with social media, with streaming, how does that landscape change, and how should an investor think about that, since it's not maybe exactly the same landscape it was before?
Yeah, so it used to be every 8, 9, 10 years you had to go and negotiate your big deal, either locally or nationally, right? You'd call up NBC and Disney and CBS and and Fox, and you'd run this auction. And they're still doing that, and the NFL just did it very successfully. The NBA will do it very successfully in a handful of years. But with new entrants into the system, right? People like Amazon, people like YouTube Live, Fubo. All of a sudden, you've got DAZN, you've got these other folks who are streaming, who are saying, I want to be a part of this. But then you've also got the likes of NBC and Viacom launching their own streaming networks, whether it's Peacock or Paramount Plus or HBO Max. And so the real challenge and where the leagues are going to really earn their keep is figuring out how to make that transition. And what they're very good at is they're very good at chopping up rights. And you're seeing it now, the way the NFL has handled Amazon. They've said, okay, we've got this Thursday night package. It's always been a little bit of our softest package in some ways. Let's go experiment with that, right? Amazon, pay us a lot of money, which they did, and let's go do some things, right, and see what we can do with that. And what they're doing is getting smart. It's like paid R&D, God bless the NFL, where they can then when the time comes, maybe it's 10 years from now, and it's no longer NBC and CBS competing, it's Peacock, Paramount Plus, and Amazon competing, they kind of know the tricks of the trade, right? And so while the landscape is changing, because the content is so strong, the dollars will be there, right? So as an investor,
Right.
you may have to get comfortable that the management teams at the leagues can manage through this what I'll call era of change, but you know that the content is strong, so you know that the dollars will be there, right? I don't think the dollars are going away. I just think the way in which they'll come in will change. And I'll add one more thing to that. Because of all the stuff we've talked about previously around NFTs, merchandising, collectibles, imagine a world where you are streaming, and so there's a more direct relationship with the consumer,
Right?
And you can serve up. You know that I'm watching, right, the Knicks game, so you can serve me NFTs, right? I watch the Knicks game. There's an amazing play in the third quarter. I turn the TV off, and next thing I know, I'm getting an email, right, with an offer to buy an NFT of that game, right? And that's not something that used to be able to happen, but now in the future we'll be able to do that. And I think that's where this is getting super exciting. I think a lot of the investors are getting stoked about what the future might be.
Yeah, see, I would want the Trae Young shot, and so that is just like I just made myself very unpopular with all the Knicks fans out there. So, too soon,
there's a lot
right?
you got a lot of New York people here. What are you doing? It's the season starting. We're all optimistic. You're bringing back that thing.
Not good for my career. Not good for my career. Just as we wind up, I got a quick question from the audience because we didn't talk a lot about leagues and teams, but soccer is professional soccer, the MLS specifically, is something you and I have talked about before. How has the development of soccer in the U.S., how is that changing the valuation considerations? What have you seen there that may be indicative of the broader landscape?
So values are going up. There's no doubt about that. I think, people like to just look at the ratings numbers and say, well, there's not that much interest because the ratings aren't going up. That's not fair, right? Because when we look at all the sports, ratings are getting hit hard. What you have to look at is actual engagement. And for me, the first thing I look at is, well, people go to the games. And when you look at what they did in Atlanta a few years back when they opened up the stadium, and not just some small, 20,000 person stadium, they opened up the football stadium and they were selling out every game. That tells me that there's engagement, right? And when I, go out, or I live out here, there's a bunch of soccer fields, people playing soccer 24/7, right? We know that the interest is there, and I've been saying it forever that it's going to catch up, right? There's no reason why it won't catch up, and we're starting to see is that interest in getting there. And I think the other thing is, and it goes back to what I was saying earlier around the way to monetize. It may not be that MLS is going to monetize in the near term with some big, huge TV contract, and people should stop waiting for that. But are there other ways for them to monetize? And the answer is absolutely yes, because they've got that engagement, and now we know how to monetize that engagement. And so, I see a lot of smart people going and putting money into MLS, and I think, they're spot on for doing it.
All right, 1 minute left. What's the sports story, the sports business story that we aren't talking enough about out there that's crossing your desk or you're emailing or texting people about? And I had to end on a Debbie Downer, but I will because it's true. I think sports betting has taken on, while it's clearly an enormous market opportunity and something that we're very focused on and will be, but people are somewhat treating it as if it's this disruptive technology, but it's not, right? We've been sports betting forever, right? It's just that we've now regulated a market. So it's a new market opening up, but it's not disruptive. I think the thing that makes me nervous is that when you look at some of the rest of world markets like the UK, there will be regulation, right? And there will be problem gambling. And I think we as responsible sports people, businessmen, have to understand that. And we have to make sure that we're being responsible. I think the betting companies are being responsible, by the way. I think I've been very impressed with the things that they're doing, but I think we all need to keep that in front of us, that we don't sort of lose the plot that it is gambling, right? And we do need to make sure that we protect those that may not be able to handle it the way they should be able to.